Greetings, inderesTV viewers and listeners. Nordea published its second quarter results today, and I have the pleasure to interview Nordea CFO Ian Smith today here at the Nordea headquarters in Vallila. Ian, thanks for having me here.
Great to see you again, Henry.
How would you summarize the quite eventful second quarter of Nordea?
I think you're right. Eventful is definitely the description, and sometimes, you know, we where we are now, you forget what the start to the quarter was like. When we spoke 3 months ago, it was not long after the U.S. tariff announcements, those kinds of things, and the market was very much in turmoil. It's nice to see that we've seen some stability return. We've seen a bit of a recovery in equity markets, and certainly finished the quarter much more strongly. That said, I still think that the activity levels, particularly corporate activity levels, IPOs, M&A, those kinds of things, are very much subdued because of the uncertainty. We hope that returns in the second half. But yes, quite a turbulent quarter. We're pleased with the outcome. So return on equity of 16.2%, very clearly the highest in the Nordic banking population. And I think the things that are particularly pleasing during the quarter was we saw lending growth, particularly on the corporate side, which is very welcome. The housing markets are still quite subdued, but we've talked about that quite often. So good lending growth, good deposit growth, and good cost management. And then we always talk about loan losses. I think credit has been exceptionally strong in the quarter. Our loan losses before any release of provisions or anything like that were only 4 basis points. So that says that I think our customers are in extremely good health. So I think there were some real highlights in the quarter, despite it being quite difficult from a market perspective.
In which market did you see especially strong lending growth, and are you winning market share in some markets?
So top of the charts is Sweden, where we saw mortgages growing 3% year over year, and we're clearly winning market share in Sweden. Norway performed strongly, starting to see some positive, and this is on the household side, starting to see some positive movement in Finland. Denmark is still quieter than the other markets. And then on the corporate side, it's really been in every market. We've seen lending grow in Finland, in Sweden, in Denmark. A little bit down in Norway, but that's because a lot of our lending there is in US dollars, and there's some US dollar weakness over the last quarter. But I think it's a strong picture in all markets. Now, let's see if that continues. We really need to see stability. I'd like to see a reduction in geopolitical tension, those kinds of things, but all outside our control.
Yeah, I think we're all hoping that. Do you see, if you're winning market share, it means someone else is losing it. So do you see any heating in the competition or pressure on lending margins or that kind of things?
I think we see strong competition everywhere, both on the household and the corporate side, both in terms of pricing, but also in corporate lending, in lending terms and conditions and things like that. Now we're well equipped to deal with that, but it does mean that we've seen a bit of pressure on margins on the lending side. Again, particularly in large corporates. But so competition is pretty strong.
You mentioned the return on equity of over 16%, but if we going forward, I think it helped a lot this quarter that you released again or decreased the management buffer, and you still have over 300 million euros of management buffer left, and it gives you some room for maneuver. But thinking ahead, let's say next few years, do you see the return on equity level of over 15%? Is it sustainable because you can't play with the management buffer forever?
Yeah, that's an important thing. Now, I'm gonna defend a little bit this question of the management buffer release, because even if you set that aside, we would still and stripped it out, we would still have posted the highest return on equity amongst Nordic banks. And we've been very clear, very transparent about we would either use or release the management buffer. I think the important question is the one you raise, which is what's a sustainable level? And everything we see at the moment, depending on interest rates, says that above 15% feels manageable, feels sustainable. But and it's a big but, which is about the rate environment. That was much harder to deliver when rates were zero or negative. Around about 2%, which is our current expectation for average rates, which I think is reasonable. We think that a mid-teens market-leading ROE is very sustainable.
So you're implying that you're keeping this target for the next strategy season as well. And that comes maybe.
I don't want to front run what we might say about strategy in our Capital Markets Day, other than you can always expect that Nordea has the ambition to be among the most profitable banks in the market.
Exactly. Your asset under management grew again as usual, but I think those management fees decreased a bit. What was behind that?
Yeah, I think that's a really interesting dynamic. So assets under management increased by 9% to 432 billion, and we didn't see the same increase in our fees. Two things driving that. Savings is the biggest part of the fees, and the first thing to understand is that even though we increased 9% year over year, there was quite a few ups and downs in that period, and we earn fees based on daily AUM, and the daily averages growth is much lower than that. So that's the first part of it. The other thing we've seen is that customers, both Nordic and international, are they're going a little bit. They've been a little bit risk off in the first half of this year, and that's understandable because of the market turbulence. And when they go risk off, it means they buy bond funds, they buy trackers, they buy those others, and so the growth in our AUM has been so that the front book margin, if you like, has been lower than the back book because of those customer preferences. So growth has been in lower margin, lower risk products, and let's see how customer preferences evolve. If we get some stability, some consistency, Nordic customers tend to prefer equities, and so you might see that balance change a little bit.
Then lastly, a bit larger, a big picture question. Just recently, I ran into Nordea's press release that stated that it was about households, how they see climate change or extreme weather events affecting their home value, or if they should take that risk into account. And also, incidentally, I saw a long column on Financial Times that it claimed that at least in some parts of the world, especially, let's say in the USA, climate change and extreme weather events could suppress home values, especially in some vulnerable states, and that would deprive households of insurance because no one would insure those houses in the risk areas, and that could actually cause a perpetual decline in home values, which is of course bad for banking. And I know that climate change might not be that radical in extreme weather event sense in the Nordics, but at the same time Nordea is making very long loans of 20 to 30 years in the future, so I think it's a relevant risk in the long run. So how how Nordea prepares for this extreme weather event risk that there might be some areas where we see a constant decline in home values, as we already see in Finland, but not because of climate change, but because of other reasons?
Yeah. So I'd say, Verneri, you're right, and we agree with you here at Nordea that climate change is a very important risk to manage. And I guess there are a number of ways in which we seek to tackle that. The first is to make our contribution to lowering emissions and trying to stem the effects of climate change. So we're very focused on that, and you'll have seen a lot of our targets, commitments, and our progress reports on reducing emissions across our portfolio. And then we support other initiatives in society, such as the piece you talked about in terms of that impact. And we work with our customers to help reduce emissions, and we work on our own emissions reduction. So we take that very seriously. As you point out, I think there are parts of the world that are more exposed to extreme weather events. I think things are a little more stable in the Nordics, but we certainly can't ignore it. So we very much factor climate risk into account when we think about the value of collateral, when we think about mortgage lending or other lending that we're prepared to do. And there's no question there are going to be certain parts, perhaps a little more isolated and a little less material in our own regions, but there are going to be, over the long term, places where I think it's going to be more difficult to sustain home building because of the impacts of climate change. I'm thankful that it's not widespread in the Nordics, but we take it very seriously.
Thanks, Ian, for interesting answers, and hopefully we see you in the next quarter.
Well, very good to see you again, and enjoyed the conversation. And yes, look forward to the next quarter.